In what ways do you think there have been setbacks in terms of that international finance center status? I'm not saying it went away, but the last 2 years have been difficult since you brought it up. In what ways do you think we have to improve?
In fact, if you look back into the last 2 or 3 years, Hong Kong has gone through quite a number of challenges. But if you look at the financial sector, it's been extremely vibrant. One, it's been very stable. The financial system has been very stable with the exchange rate being very stable, most of the time on the strong side as well. But if you look at the financial sector, it's actually been growing despite the challenges. For example, for asset management industry, in the last 3 years, the asset under management in Hong Kong grew by 50%. Same with private banking. In the last 3 years, the AUM grew by 40%. Capital markets is strong. Yes, it's slowing down a bit in the equities market, but in the 2019, 20, and even 21, equity market is strong. Bond issuance, Hong Kong is actually the largest bond issuance centers for international fundraisers. And so I think the development has not stopped, but of course, going forward, we see more opportunities, whether you're talking about China-related opportunities,
right,
or fintech, or green and sustainable finance.
Well, I was going to ask you then, apart from simply reopening,
right,
the city physically to visitors, what else do you think? What was the next immediate ask from all the bankers coming through? What did they ask you? What do we need?
They are really looking forward to what they can do in the city and how they can expand their business here. So the main thing that they ask is, hey, where are you going in terms of opportunities? Which areas are you focusing on? And my answer to them is simple. There are three: China-related opportunities, fintech, and green finance. If you look at the China-related opportunities, the various Connect schemes has been successful and growing. And in just 12 months, in the last 12 months, we've added 4 Connect schemes to this family, including the Bond Connect Southbound, Wealth Connect, the ETF Connect, and Swap Connect. And going forward, we will expand many of these Connect schemes, which are still in a very initial stage. We will try to find whether there are other opportunities for expansion, like for Southbound Stock Connect, can they be done in RMB so that we can develop the RMB equities market here?
Right.
For fintech, well, Hong Kong has been one of the most progressive cities in the world in pursuing technology like how to use data, developing central bank digital currency, how to think about the future role of virtual assets in our financial system. Green and sustainable finance. Well, Hong Kong is the largest green bond center for international issuer. In just, let's say last year, the green bond issuance in Hong Kong has been like 4 times the year before. And this year, even though the market is slowing, we are seeing continuing momentum in green bond issuance. And again, our role is to link the need of China in transition financing with the global financial markets.
You opened up a lot of doors that we need to address there.
Right.
One of which, and since you brought up fintech, Hong Kong is being framed Hong Kong against Singapore. Do you think that's a fair comparison? In what way is that fair? In what ways do you think Singapore is doing a very good job also?
Well, in fact, if you look at the global fintech developments, I have to say that Asia is actually probably going a bit faster. It's not just Hong Kong, Singapore. If you look around Korea, China, they're all really going fast in fintech. And in fact, when BIS, the Bank for International Settlement, started establishing their innovation hubs in different places, Hong Kong is the first, Singapore is the second. So you can see the significance of Asia. And we're going, we're innovating along similar tracks, but with a bit of differences. And for that, I think there's a lot of room for collaboration. It's not really about competition. It's about collaboration, complementarity, and find a way to jointly push the boundaries of the role of technology in finance.
Okay, I want to pivot to, you probably know where I'm going, the currency peg.
Right.
And the Fed is on its most aggressive tightening cycle, arguably since the peg was put in place in the early 80s. Is there any reason to believe that the HKMA won't be able to limit and manage the consequences and side effects of this peg?
Well, for the record, we have no plan and no intention at all to change the Hong Kong dollar peg. It's been serving Hong Kong extremely well for 4 decades already, through different cycles, through different crises. If you look back in the last 2-3 years, we've got plenty of challenges. But the financial system, especially the exchange rate system, has been resilient and remarkably stable. The confidence of the market on the peg is very strong. So there's, and in fact, and also Hong Kong is a very small, open, and externally oriented economy. So having a stable exchange rate is very important to us. And but of course there are trade-offs. When the U.S. raised their rates, because we operate the peg, we have to follow. And the market, the interest rate automatic adjustment mechanism will take our interest rates to where they are. And the peg is backed by very, very strong buffers in Hong Kong. We've got a very deep foreign exchange reserve with amounting to $430 billion US. We've got a very strong banking system that can withstand shocks. So I'm not worried the least bit about whether there could be any impact of the interest rate rise on Hong Kong.
Right. I mean, this is probably a longer term question, and it's not so much the need for a peg, but what it's pegged to, and you probably know where I'm going with this. If the Chinese currency, the renminbi, becomes fully convertible, is that an option that you're looking to explore long term?
Well, as I said, we are sticking with what we have now, the US dollar peg. We are a very externally oriented economy, and we trade and we invest in different parts of the world. Currently, the main currency that the global system is using remains US dollar. And again, the peg has served us for a while, so there's no reason at all to have any change to it.
One of the other side effects, the second order effects, if you will, because as you mentioned, we bring the Fed's policy in, you have HIBOR rising, you've been defending the weekend of the peg. Home prices, which aren't really in the most healthy state right now, the property market, there's been some concern that we might either see a softening property market. Two-part question to you. Are you concerned about the housing market? And the second part to that question is, do you think the banks will be okay?
Well, it's actually related. We are seeing housing prices softening a little bit. From the peak of September last year, it has come down by about 10% so far up to now. And the turnover has been coming down. So the rising interest rates and also the economic conditions, both globally and Hong Kong, have got some impact on the housing prices. But we are not concerned about the impact on banks at all. Because after many rounds of macro-prudential measures, the buffer that they have on their mortgages is actually very big. If you look at the loan-to-value ratios of the mortgages here, the average is only 50%. And the debt servicing ratio is very low, meaning that the repayment ability of borrowers is actually very strong.
But very recently, though, you raised in some mortgages up to 90%, right? So people who took advantage of that bought at the peak. Are you not worried about negative equity?
Well, for people who can take out mortgages at 90%, either they are bank staff for special rates, or they take out the mortgage insurance program with the Hong Kong Mortgage Corporation. The bank's exposure remain at the 50-60%. So even if there should be any corrections, the banks won't be affected. That's one. And secondly, for people who take out 90% mortgage insurance program, they have to be homeowners. They have to have strong repayment abilities. So the negative equity does not mean that they're not able to service their mortgage.